Turkey was among the world's fastest growing economies in 2020 despite the coronavirus pandemic. While much of the world sank into recession, Turkish GDP grew 1.8% last year as banks stepped up lending and the government rolled out support for businesses. And Ankara is expected to implement more reforms to keep the momentum going. Mobin Nasser reports.
It's all hands on deck at Akbaş Tekstil, a fabric dyeing factory on the outskirts of Istanbul. Floor manager Sabri Karar Arslan says despite the COVID-19 outbreak, it's managed to remain open.
When the pandemic hit, many businesses were forced to shut down, and we were also afraid of losing our jobs. But we were able to continue our operations by carefully following precautionary measures.
The company supplies fabric to garment manufacturers. International orders initially dried up as other economies locked down. But the owner Necati Ildan says he managed to keep production going thanks to domestic demand and help from the government.
Nearly all of our international orders were cancelled between March and May, but the government was very helpful during this period and we were able to maintain operations, albeit at a lower capacity. As Asian suppliers faced restrictions, European firms started turning to us to meet their demands, and we were able to get more orders.
Thousands of businesses like Akbaş Tekstil benefited from the government's decision to implement targeted lockdowns instead of shutting down the entire economy. It also rolled out incentive schemes like salary support programs so firms could retain their workers, and it subsidized loans to boost spending. Government-backed low-interest loans helped the financial sector grow by more than 21% over the previous year. That pushed household consumption 8% higher. Government spending also increased by close to 7%, bolstering economic activity. Collectively, these measures helped GDP expand 1.8% in 2020, making Turkey one of the only economies to register growth last year, alongside China and Egypt. And now the government plans to launch a normalization drive, gradually easing lockdowns and other COVID-19 restrictions. While that's expected to boost domestic demand, experts also expect a revival in international trade.
Our 2021 GDP growth forecast is currently at 5.5% year over year. The biggest factor behind a good growth story is that the global economy is staging a better than expected recovery, let's say. Global growth means Turkish exporters will have a much better time this year compared to last year.
Next week, Ankara will roll out more economic reforms. It aims to lower the cost of production for Turkish manufacturers and help them access more technology to raise the value of their goods. That's promising an even better outlook for Akbaş Tekstil and thousands of other Turkish businesses. Mobin Nasser, TRT World, Istanbul.
For more on this, Ceyhun Elgin joins us now from Istanbul. He's a professor of economics at Boğaziçi University. Welcome back to the program, Ceyhun. Firstly, these figures show that Turkey managed to outperform most of the world's other economies in a year that saw recessions hit across the globe. Can you tell us more about how the Turkish economy managed to actually expand during the pandemic?
So actually, Turkey outperformed its competitors or other emerging market economies as well as its own forecasts, because the IMF, the World Bank and the OECD were all forecasting the Turkish economy to decline at a rate about 5% to 3.8% annually in 2020, even though at the end the number became a positive number, 1.8% positive growth rate. And I believe that if we just look at the Q4 numbers, of course, we observed that the domestic demand was the main driver of the headline growth, which was partly offset by net exports and inventories. But however, I think the two main reasons behind the positive growth rate of the Turkish economy throughout the year is, one, less strict government stringency measures. There were lockdowns, there were curfews, but they were more targeted, as you also have mentioned. And those basically left the manufacturing industry, the businesses, most of the businesses, the manufacturing businesses in operation. And the second reason was that the monetary policy, especially throughout the summer and the late summer, early fall, before the change in the governorship, was quite expansionary. And the low interest rates, the policy rates, as well as the credit expansion have basically resulted with this growth rate. And they also have lagged effects that we are observing in the quarter four, even though the monetary policy stance has drastically changed over the fall.
Yes, and that credit expansion, the boost in lending that we saw last year, as well as boosting household consumption, it also added pressure to the inflation rate, which reached around 15% last month. The government says it wants to make price stability a priority this year. It wants to bring inflation down. How can it do that?
So the credit expansion, increasing domestic demand, as well as the depreciation of the domestic currency against the foreign currencies, basically resulted with the inflationary pressures. And now the change in the governorship of the Central Bank of Republic of Turkey basically means that the governor or the central bank now wants to follow a much more contractionary monetary policy, which we have observed with the spike in the interest rates, as well as in the spike in the reserve requirement ratio very recently. And Turkey now has one of the few countries in the world that has increased the interest rate, the policy interest rate, as well as the reserve requirement ratio compared to the pre-pandemic levels. And all these, I hope, and the central bank hopes, as well as the policymakers hope, that will help to control the inflationary pressures in 2021.
Do you believe that the Turkish economy will be able to sustain this growth for the rest of 2021? And how will it be able to do that?
I think the market consensus is around 5.5% for 2021. And I think it's a reasonable number. Of course, in the case of Turkey, like in other emerging markets where the growth rates are quite high compared to the developed economies, the forecast errors are also high. So, but currently the market expectation is 5.5% for the 2021. Of course, it depends on the course of the pandemic. It depends on whether we are going to have a third wave or fourth wave or any other waves in the future. But as long as the pandemic is under control and as long as other countries are also loosening their stringency measures with the vaccination efforts, I think it's a reasonable forecast.
Okay, Ceyhun Elgin from Boğaziçi University, thanks so much again for joining us here on Money Talks.